Let's take a look at some charts on Bitcoin from this week's article on Brave New Coin. So I mainly do these articles as a virtual autopsy of what's going on in a network. Is the network healthy? Is it sick? Is it dying? Is it thriving? What's the on-chain data look like? Is it centralized? Are people using it? Do people care? And then, obviously, technical analysis. How does the price look? Where do I think price is going? What does math tell me? So we're going to look at every single chart or image from this article. I mean, I think they're all important. I think if people understand these individually, that they'll have a better understanding of what's going on. With price, let's start off with market cap, and it's pretty clear. There's been one big loser over this past few weeks, and that's Ripple. And I honestly think that's best case for Bitcoin. You know, the fewer competitors, the better in the high cap space, especially obvious what I'd consider egregious scams. But that's a different article entirely. Obviously, Bitcoin had a monster Q4, one of its biggest ever, and handedly outperformed most other coins, which is why Bitcoin dominance went up. Altcoin pairs, alt-BTC pairs, all fell rapidly, some to all-time lows. And that's all expected if BTC has a quarter that it had when other coins did not. You know, if you're a coin that stayed flat in Q4, you lost a substantial amount of ground against BTC, unless your emission schedule made up for the difference. Tether here, of course, still growing. Another story out of Q4 was just the insane amount of stablecoin prints, specifically from USDC, but it happened with Tether as well very dramatically in Q4. I mean, you can clearly see the rise here. And yeah, there's some correlations with a rise in Tether, a rise in USDC, and a rise in BTC price, as is to be expected. Any demand for crypto will see a rise in stablecoins because it acts as an on-ramping vehicle. Looking at hash rate and difficulty, both of which have continued to push all-time highs over the past several years. Again, we got an all-time high in hash rate late December. Not that many people were talking about it, but it happened. There were a few Asics that got released over the past few months. One in January that I haven't heard too much about, but apparently exists. So to me, this is all bullish for any coin. Anytime I'm seeing miners adding hash rate, that says that they're assuming price is going to go higher and or they will get some return on investment. That also tells me that they assume that there's a future for the project or the coin if it's proof of work. If we look at block times, 10-minute targeted block time for BTC, for most of BTC's life, block times have been sub 10 minutes on average because of the constant increase in hash rate. So when you get an increase in hash rate before a difficulty adjustment, you will see a drop in block time, as we have continuously. And the opposite is true if you see hash rate decline before a difficulty adjustment. The two most recent obvious examples occurred throughout 2020. But if you see hash rate decline before that adjustment, block times will increase substantially. And inflation actually goes down in those periods because you're getting less blocks confirmed, less block rewards created. But as we sit now, we're around 9 minutes on average. If we look at the planned emission schedule, release schedule for BTC, stepwise disinflationary fashion out until 2060 plus, theoretically, maybe earlier, depending on how fast mining happens. But there are plenty more halvings coming. The year's up here, 2024 is the next one. And we're currently around 2% inflation. If you look at all the Asics, they are all in heavy profit here at 4 cents per kilowatt hour electricity costs. You can see there are definitely a lot of Asics, I think 11 total in 2020. I guess there were 2 released in 2021 already, both in January. So any new ASIC is definitely going to help push hash rate, continue to push hash rate. Any ASIC that we don't know about publicly is going to continue to push hash rate. And if price can support the deployment of additional hash rate, it's going to keep happening, you know, until it doesn't make sense as a miner to add ASICs to the network. And right now you're making a lot of money at scale if you're mining BTC and ETH, especially. If you look at the transaction count and the average transaction sizes, transaction counts have actually been kind of all over the place, really. If you zoom out and you say, okay, like what happened in March 2019, what happened in March 2020, what happened just recently in like August, September. Some of this again is going to be related to block times. Some of it's related to batching. I mean, there's all sorts of efficiencies that have been introduced that will affect transactions per day, which is kind of why I don't think for BTC transactions per day is a great metric. I actually think active addresses is a better metric for BTC specifically. And I think the opposite is true for ETH. To me, transactions per day on ETH are more important. You know, if ETH is the world computer, to me, transactions per day are more important than active addresses. If you look at average transaction sizes for BTC, those have spiked heavily to multi-year highs. You generally see that when there's just a ton of activity, lots of money changing hands here. Again, this is related to stablecoin prints. You're just getting a lot of big transactions on chain. Here's the mempool. This is basically unconfirmed transactions. And you'll see people spout numbers of, you know, this is going up or down, but in general, we stay below 40, really stay below 20,000 unconfirmed transactions. Again, block times are going to affect all of this. So if block times go up, unconfirmed transactions will go up. And right now we're basically kind of where we have been over the past few months. So no real big concerns there. If we look at block sizes, the biggest thing to take away here is that most of this is maturing into bigger and bigger block sizes over the past year on average. So the pink and the purple is basically greater than 1.2 megabytes. And slowly but surely block size is getting larger and larger, and you can see how it's changed over the years. To me, this is incredibly bullish because it says people are using the chain for whatever reason, you know, speculation or otherwise, and the chain has a use case very clearly. We're not seeing just a drop off in demand, a decrease in demand, none of that. Just continued increase in demand, if anything. And if you look at average block size and fees, despite the near all-time high or all-time high in average block sizes, fees are nowhere near all-time high. So this kind of, to me, shows that the block size efficiencies that have been implemented for transactions, SegWit batching, are clearly paying off because fees are not just spiking to crazy levels, you know, like on Ethereum. The transaction efficiencies there just aren't there for certain types of transactions. Whereas in BTC realm, we sort of had our transition period where fees got really high, the network really wasn't ready for all the demand, and now here's all more demand than ever before, and fees are up, but they're not insane. So it's around $8 or less at this point on average to send a transaction. If we look at the meat and potatoes, to me, active addresses says it all, really. We're basically at all-time highs or near all-time highs for active addresses, above 1.2 million on the monthly average, definitely above 1.2 million on the weekly average. NVT kind of becomes more and more useless to me the more I look at it for every coin. There's very clearly an uptrend here, which, based on my understanding of NVT, says that we are overbought in price based on on-chain utility. So I think there's some sort of adjustment that needs to be made for inflation or something. But even using a monthly 90-day moving average, still showing a very clear uptrend here. Almost all-time highs in NVT, which in a vacuum shouldn't be bullish from my understanding, but here we are, right? And if NVT drops all of a sudden sub 80, that should be a strong buy signal because that says we've dropped too fast based on on-chain utility. If you look at MVRV, which I like over NVT at this point, it's another inverse metric of economic utility. So sell zone up here, buy zone down here. If we get oversold based on on-chain utility, MVRV will dip below 0. If we get overbought, it'll pop above 7. You can see in 2017, it ranged very heavily based on the several dips we had there. Haven't had any substantial dips yet in price, so MVRV is just straight up. So if this breaches 7 before a price pullback, then that suggests heavily that there will be a massive, we're talking 30% plus price pullback. That's bubble territory. You know, if we go to 7 plus, it would be above 46K most likely price wise, and then we get some nasty retrace after that. Here's UTXOs or coin age. The orange is coins that have moved recently. Blue is coins that haven't moved in the past 5 years. And really, I look at this because if the newer coins sort of breach 20 to 30%, you know, if the orange gets near 20% in total, that's typically some sort of top because it just represents holders moving coins to exchanges to sell. At the end of the day, if you're moving coins at all, it's typically to sell them. So we're seeing a lot of churn on chain right now, just new buyers, institutional money, custody stuff. A lot of that is going to influence the UTXO data. But if old coins are moving, that almost invariably means they are being sold. And that is not bullish. That will create downward pressure in price. And unless buying keeps up with that selling pressure, price will start to go down. So currently it's around 10, 11%. If it gets above 13, 15%, historically that's a local top in price. So we're near, but not close. If we look at GitHub commits, like most projects, Bitcoin really only has 2 repos on GitHub. Both are semi-active. You can see the Bitcoin Improvement Protocols repo hasn't been super active over the past few weeks, but it was fairly active in 2019 and 2020. If we look at OTC buying demand worldwide, that has certainly crept up again, definitely throughout 2020 and definitely throughout late 2020, early 2021. This may actually start to decline as we get more exchanges worldwide. I don't know if we'll ever see OTC volumes like we did in 2017, 2018, just because we have more exchanges now, other than local Bitcoins. But it's definitely an interesting metric to watch for as far as demand is concerned. Latin America is still extremely high. Looks like they had an all-time high in volume in late 2020. North America certainly cruising near all-time highs. Sub-Saharan Africa also near all-time highs. Google Trends continue to increase over the past few weeks, higher than they've been in the past 2 years. Incredibly bullish. It says there's a lot of new people coming in and a lot of searches around what is Bitcoin, where do I buy Bitcoin, where do I sell Bitcoin, what is the price of Bitcoin. All that represents interest, and you can see over the past year certainly crept up to a new yearly high. All right, let's talk about price technicals. Here's one that's quickly become my favorite indicator recently. This is the MA multiplier. So this is the 2-year moving average in the green line here. The red line is 5x the 2-year moving average. And historically that has represented overbought territory, oversold territory in the green. And right now it's above 46K. You can see in 2017 we hit that line a few times before actually breaching it, which is certainly what I'd want to see here. I don't want to see this just shoot up, because then it's just going to shoot down. Marathon, not a sprint. Importantly though, recently it did breach the median line, which is this white line here. So at this point I'd view that as support. It was resistance when it broke down here. It was support when it broke up here. So that's definitely a level to watch as far as a buy opportunity, a dip opportunity. But anything above 48 should be a DCA out of your position, spot position, based on historic price action. Now I do think we see 6 figures this year, so I assume it's going to hit 50K and get denied at 50 and have a nasty retrace to 35 or something nuts like that. But I think the expectation is definitely increased volatility over the next couple months, especially if we go to 50K. Here's Bitfinex long shorts, VPVR, RSI, 5200 EMA. So a few things I noticed on this. One, Bitfinex longs have continued to decline as price is going up. So it says there's not much to long squeeze at this point. The 200-day moving average is all the way down at 16K. Yearly pivot all the way down at 22K. Volume support sub 12K. No bull or bear divs on RSI. Yearly pivot resistance at 37. And then above that it's 48. So in the near term, those are the next 2 levels to watch. Anything sub 22 should be a massive buy opportunity. Anything near 16 should be a massive buy opportunity. And I highly doubt it gets anywhere near 10. Sub 10K would be a gift as far as a buying opportunity at this point. So overall, this trend is super strong. It's very overbought. It's continuing to get farther and farther away from the 15 to 200. The 15 to 200 are getting farther and farther spread apart. All that is signs of a trend that is quickly overextending itself. There isn't a bear div on RSI, like I said, just yet. So this probably has a little room to run yet before it finally slows down. Here's a daily cloud, and it is just textbook bull trend here. We had a decent chance at retracing here with the TKC clamp as price went sideways. Price said, nope, we're going higher. Made a higher high, broke all-time highs, and it's just been moonshot ever since. current support based on the Kijun sits around 25K. So even as low as 25K, it's showing a strong buy way down there, which is a 20-30% drop at this point. Lastly, looking at CME futures contracts, in general, the expiration rollover periods for these have been a high volatility period historically since they began in December 2017. And the more recent contracts especially have seen volatility surrounding those dates. So the next upcoming date to watch is the end of the month, January 29th. So I'd certainly expect increased volatility surrounding that date. But overall, everything looks great. As far as the network is concerned, there's no bearish divergence in activity versus price. There's no bearish divergence in price versus momentum. Everything is obviously overbought. I think everybody knows that. But at the same time, we have massive institutional FOMO rotating into crypto for the first time. Lots of press, lots of Google searches, lots of new people coming in from all facets of life. So by all accounts, it looks like Bitcoin will have another great year ahead of it.